Okay, you're with us here on MIDCAP Radar. Bajaj Electric numbers at the bottom of your screen. Stock was up 4% going into the results, 34 crores compared to a poll of 34 crores. So absolutely bang in line. EBITDA is up 86% at 80 crores compared to 43 crores. And we've got the net profit number, which we already sort of put out earlier. The index, the Nifty, is absolutely flat as these numbers keep trickling in. Although there is enough and more happening as far as stocks are concerned, L&T, United Spirits, what have you, Yes Bank, Axis Bank, and these are large names that I'm talking about, it's not showing up in the index. And the very simple, in a way, explanation for that, of course, is the fact that we already had this 350-point move in the last 3 sessions. I mean, now 4. Big move in very compressed time frame, and then maybe time for some sideways action. European markets are also opening. So I think the open is slightly in the red. But it does take a minute, 2 minutes or so to settle down, and finally better rates start to come through. But for now, it looks like it's a slightly weaker kind of open as far as Europe is concerned. More numbers. Sumaira is with me. Sumaira, afternoon. Arvind also on your screen.
Hi, Prashant. Good afternoon to you. Yeah, actually, for Arvind, Q1 FY19 numbers, we'll have to remember, will be revised because the NCLT had approved their demerger. So they'll be reporting numbers separately for the demerged companies. But at 1796 odd crores for the revenue, I think it might, well, let's just actually hold our judgment and see what the revised numbers are. So far, at least, the stock has come off. For Bajaj Electricals, though, the numbers are looking quite good this time around. And the one number that I saw, that's the top line number, that has come in exceeding our poll. So that looks good as well. For Arvind, we'll just have someone joining us shortly to take us through what these numbers mean, given the demerger. But for now, let's take you through our top stories. On the market, the trade is flat, though key indices are off the day's low. Weakness in heavyweights like Infosys and ITC drags. L&T fights for the bulls. MIDCAP index sees a big outperformance. The
L&T stock tops the leadership today following an all-round high-quality beat coming in the second quarter. Management maintained their FY19 revenue guidance at between 12 and 15% growth. L&T's earnings take the entire capital goods sector higher. Auto sales remain muted in October. Maruti sees a slowdown. Ashok Leyland posts its lowest sales since May. The lone bright spark remains tractor numbers as Escorts registered a 24% growth from last month. Market veteran Ramdev Agarwal says beaten down sectors like capital goods and steel could well be on the cusp of a mega rally. Adds that earnings growth remains quite challenging. The RBI governor must stand his ground and not resign. That's the word coming in from Arun Shourie just a day after the government sought to de-escalate the tension with the RBI. Shourie adds that the crisis is far from over, adds that corporate interests are involved in the present crisis and the exit of Raghuram Rajan. Okay, so those are the top stories. Just before we bring in Ashwini for his trades, look at United Spirits. There was a conference call which we cut to for a bit. Commentary on the con call was all pretty, not positive, but nothing negative. I mean, it actually was pretty steady in line with the strong results which the company showed. And since then, we have had another 15-odd rupee move on United Spirits. It's at the day's high, and that spike is clear, 46-odd rupees on USL. Okay, Ashwini is with us, as always, with his perspective. Ashwini's been maintaining that second half. We will see, poorer markets. We will see some selling coming through. Ashwini, your reading of things now.
Well, Europe has opened lower. Now, there are stocks which have not gone up. I mean, this entire Bank Nifty rally, things like HDFC Bank, Kotak, they have not gone up at all. So my sense is that in this sort of a choppy market, what you can do is get into these stocks, and chances are they will also participate at some point. So that gives you a bit of safety as well as, kind of keeps you long, because things where people are already long up to their necks, going there may be a little bit more risky. So you can buy into the Bank Nifty because HDFC Bank and Kotak tend to impact Bank Nifty on an expiry session. So HDFC Bank is a buy with a stop of 1885, target of 1940. Kotak Mahindra is a buy with a stop of 1090, target of 1145. And Axis Bank, where results are expected, that's a buy with a stop of 347, target of 370.
All right, Ashwini, thanks very much for joining us with your afternoon trades. Well, also this morning, we caught up with Ramdev Agarwal of Motilal Oswal Financial Services and also Gokul Laroya, the co-CEO of Asia Pacific region at Morgan Stanley, to talk about the market. So let's hear out what they make of the current market situation and the way ahead.
We have a quite massive correction. So hopefully we are done with current round of correction. But you know, the way things are unfolding, particularly in the credit market, and credit market is backbone of economy, in the sense that from the consumer side, that has been the one strong segment. And now we have seen an L&T result, at least the infra and capital goods side is picking up. Now both should go together to really take the economy off after a long time. If the market is not giving you equity, how will you create the debt? And if you don't have raw material, which is called money, how do you dispense the credit? So kind of it is very important that this particular thing is taken care of. There are some wonderful companies whose stars are going to shine, and suddenly you are going to see a lot of flow of orders and margin expansion and sales growth, and then margin growth, and then P growth. All three, when they all come together, you get a mini to mega kind of thing. The company might be, say, 1,000, 2,000 crore company. Right now, nobody bothers. And then suddenly it takes off to become a lakh crore company. All these still assets are being cleaned up. They will all give huge orders to complete the backlog in terms of their even maintenance, and then increase the capacity. So you will see a bunch of orders coming from there. Still markets are very good. So wherever businesses are doing well and they can dump capacity not only in India but all over the world.
We are of the view that the longer-term growth prospects in India remain pretty good. If you think about where utilization rates are now, they're higher than they have been over the past several years, and typically that is a driver for private investment. So we think that the third leg will kick in. It's taking a little bit longer than we thought, for sure, right? But eventually it will kick in. The corporate optimism, right, was the best I've seen in a while. The dynamic in India that's always interested me is that when the markets were doing well, we used to speak with a lot of companies, and corporate optimism was not great, right? Oh. We've now come into a situation where markets have actually softened because of global issues, for the most part, and EM issues, as you point out. But corporate optimism has been about the best that I've seen in a while. And I think that is a good indicator to me that the investment cycle has a good shot at turning it.
So we've got, what, 1 point, 2 point change on the Nifty. But look at, I pointed out United Spirits. I mean, that is the one stock which actually has been moving higher and higher. 624 on futures, 621, 622 on the spot. Okay, let's bring in the management at matrimony.com. They posted, what was the tepid set of earnings for the second quarter. Revenue growth slowed while margins were hit by high marketing and ad spending this particular quarter. Murugavil Janaki Raman is founder and managing director of the company. He's joining us on a phone line right now. Mr. Janaki Raman, thanks very much for your time. Could you first up tell us the growth in subscribers and whether there was any change in pricing in the quarter?
The paid subscription volume moved up by 4.1%, and compared to the Q2 of previous year, number of paid subscriptions was around 184,000. And in terms of ATV, it increased by 4.7% to 4,542. Yeah, so...
What is the percentage increase in ATV?
ATV has moved up by 4.7%. The ATV has been on the rise, and it has been continuously moving up. So the growth is a combination of...
So for the full year, could you tell us, I mean, how, that is H1 basically, what is the growth in paid subscribers and the ATV?
The paid subscription for the H1, it's 2.4% for the H1. The ATV has moved up by 5.1%.
Okay. Mr. Janaki Raman, good afternoon. Your finance costs have shot up quite a bit this time around. Could you give us a sense of, what the debt situation is at?
No, the company doesn't have any debt, actually. In fact, it's a debt-free company. We have a close to around 180 crore on our books. So the company is a debt-free company. So what do you think about it? The money collected in advance from the customer is treated as a short-term liability. So because we collect money from the customer in advance, we accrue over a period of the duration. So the company doesn't have any debt, actually. So.
Right. Fair enough. Would you? Is there any way? Should we continue with this 4% odd kind of subscriber growth, paid subscriber growth for the year?
No, basically, the thing is that we are investing big into marketing because we realize that we need to grow much better than the way we have been growing. That's one of the reasons there's an increase in marketing costs because internet company the growth is important. The marketing is definitely adds to the fuel to the growth. Look at the marketing expense of the matchmaking; it's almost jumped by 53%. While the gross margin, the business is around 49%. The gross margin is very healthy for the matchmaking business. Almost we're talking about 50%. The increase in marketing cost, that's what that's pulling down the EBITDA margin. But all the increase in marketing cost, which help us to have a better growth a couple of quarters down the line, we definitely see that that happening. On the margins, while there may short term, there will be impact on the margin because of the increase in marketing spend. Definitely a few quarters down the line, the margin will get better. The short term definitely a further increase in terms of impact on EBITDA margin. That's going to be there because of the continuous marketing spend which your brand will do to drive the better growth. This is the matchmaking side. When it comes to wedding services, we expect wedding services to have a healthy growth from this quarter onwards. So we expect a couple of quarters down the line, the combination of matchmaking and wedding services, we definitely expect a better growth to come. The EBITDA margin also a couple of quarters down the line. While in the short term there will be an impact, it will bounce back a couple of quarters down the line. So that's the way we see the business going forward.
All right, Mr. Janaki Raman, we'll leave it at that. Thanks very much for joining in. More numbers coming through. For First Source, looks like a decent set. We don't have a poll for it, but on a Q-on-Q basis, numbers are looking decent. Even on the EBIT, it looks like there's, I think, a 12% growth odd. There's some comment from Sanjeev Goenka, the chairman, who says that they'll continue to design. Okay, these are just some colourful statements, but nevertheless, it looks like a decent set. The stock's now up about 2.5%. Looking good. So let's focus on some earnings. Then Arvind came out with numbers just a short while back. The stock has shot up. It's at the high point of the day. Mangalam is here with the highlights. Mangalam.
That's right, Sumera. So earlier there was some sort of ambiguity as far as the demerger, non-demerger results are concerned. The company set the record straight by putting out a press release and adjusting the numbers and giving them the effect of without demerger. So comparable numbers, revenue growth at 12% is above our expectations of about a 10% growth out there. The EBITDA has grown much higher as well, around 27%, 277, 278 odd crores is what the company has posted out there, aided with some sort of margin expansion, which has come in at 9%. This compares with about 8%. All what this has done is this has led to a PAT growth of about 30%. So the company's net profit has grown to about 86 odd crore rupees. In terms of individual segments, the most important segment, the value driver for Arvind is the branded apparel business, which showed a revenue growth of about 13%. So that's about 1,227 odd crores out there in terms of revenue. What's more important is the EBITDA for that business grew much ahead of the revenue at 20%, and that's a positive because margin improvement was also an important trigger for them. The management says 20% revenue growth is what they can deliver in this segment for this whole year. Textile business, the advanced materials division, the one that gives them higher margins, was the one that grew higher by about 21%, and overall we saw an EBITDA growth of about 24% as well. The big trigger for Arvind, however, remains the demerger and what sort of value is ascribed to individual segments, but these results are good adjusted for the pre-demerger adjustments.
Mangalam, thanks very much for that. So that is the insight as far as Arvind is concerned. We move on to earnings. Kochi Shipyard posted strong second quarter results. The growth was driven mostly by the ship repair business, as has been the case now for the past many quarters. The company saw a 47% jump in its net profit. EBITDA nearly doubled on a year-on-year basis. Madhu Nair is CMD at Kochi Shipyard and he's now joining in to take some questions. Mr. Nair, thanks for your time. The revenue growth looks really solid, 37%. Could you break this down for us? We understand that most of this has come from the ship repair business. Will we continue to see this near 40% kind of growth in the coming quarters as well?
No, there has been a major project on the ship repair side, which was a aircraft carrier. So that has aided the revenue growth.
Okay, in fact, your ship repair revenue is already about 340 crores, right, this quarter. Q1 was also strong. You had earlier given a guidance of 800 crores from this business in FY19. Are you now looking to raise that guidance then?
Not really. It's more or less around that level.
Mr. Nair, what about margins? Because they also look pretty solid. I mean, is that also a one-off? Can you tell us what would be the steady state margins going forward?
Not really, because don't look at the Q2 margins, because the Q2 margins has been aided by this major project which we got in ship repair. So you should, if you are looking at the 6 monthly figures, we are more or less around those figures.
No, so could you just reiterate that? I mean, the guidance for the year?
Yeah, see, we should see a top line of 2.8 to 2.9 crores, and the margins of PAT levels of around 16%.
Okay, what's the order inflow this quarter? What's your target for the year end, and what's the order book looking like now?
See, as you are aware, like ship repair, we are going steady. We are actually receiving our orders as planned. And we expect over the full year to secure orders of 500 to 600 crores for the year. And we have some outstanding orders also. Shipbuilding, as we had discussed last quarter, like there was this major order of the ASW corvettes. We have not yet signed the contract, but I can say that we are around the corner to sign those contracts. And on the aircraft carrier phase 3 part, we are in advanced stages of discussion. So that's also going as per plans.
Mr. Nair, thank you very much for your time. Appreciate you joining in with those details. There is Mahindra & Mahindra October auto sales numbers. Sales have come in at 58,416 units. And this is better by about 2,000 units. So that's a substantially higher number compared to what Nomura was expecting as far as M&M is concerned.
You know, apart from the MHCV, almost every segment of theirs has...
Do we have tractors, Sumera? Because that is the highest margin business.
No. So this is just the automotive business. Yeah, utility vehicles, again, over there, the growth is very muted. But cars and vans, that is where they've seen a 26% growth. Commercial vehicles have done well. And even the, the larger LCVs have done well. There, the growth is about 28%. Three-wheelers is decent as well, and exports is looking good. So 33% growth in exports to about 3,060 odd units. So that is looking good for M&M. But overall, in any case, the auto sales have been muted apart from, of course, Escort. So we'll have to wait by and see what M&M's tractor business does. But on that note, we'll wrap up on MIDCAP Radar.